Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is Wednesday before Thanksgiving. My microphone seems off there. Hey, we have a big day ahead of us here because we have a bunch of news, a bunch of economic reports that are going to be coming out here in 5 minutes. But then not only that, but we've been getting rumors overnight that Germany is mulling COVID restrictions again. And you can all remember last Friday when the yields plummeted over that. We are seeing overnight the markets taking a little bit of a dive, although they are overall up from yesterday. There's going to be a news conference at 9 o'clock Eastern time, 7 o'clock my time. So, yeah, keep an eye on that because we don't know if I don't know if this report is reliable. In fact, I kind of suspect that it's not, but they are having a press conference. So, yeah. Get what I'm saying? Be on your toes. And since it's ahead of the holiday and everything, you know, like we could really get some crazy volatility. So let's see where we're at on everything. Well, let's start with oil because the oil was really the highlight of yesterday. SPR release ended up being quite a bit less than what the market was expecting, and as such, the oil markets moved up. So that doesn't look good for the Biden administration, but hey, they could do it again, I guess. S&P 500 here again was not the greatest day yesterday, although I would say kind of choppy until sideways. Here we're a little bit higher, but then the European markets pushing us down on that. Germany news. Treasuries, on the other hand, treasuries. So, you know, we were this whole thing, we were sitting here like, what's going on? It seems like they're going to do something. There's an auction today. And then after stream ended, they really did move. And some of these moved quite hard. So there was a severe amount of steepening. You can see it here in the 30 and 5. Steepened quite a bit and was retracing that flattener that came from last Friday. So, and how did they do it? The ZB just got crushed. Okay. The ZB just got crushed. And here you can see it kind of, you know, they reverted back, but now struggling here this morning. So we got a bear steepener going on here at the moment. Although it's pretty dramatic. Like the ZB's going down hardcore and the 5-year is actually going up. Okay. So somebody's putting I wouldn't say they're putting a lot of volume into it, but when you combine that there's a large meta order out there in the spreads, and you combine that with the terrible liquidity conditions right now, you get that sort of a move. So it's kind of surprising. Natural gas still within its range. Gold and silver. Well, gold and silver really got hit by the yields, and it's kind of surprising that given the 30-year yield rising a little bit yesterday, that gold and silver did not try and make another move on the way up. But I think that the bigger thing still is the dollar. Now, the dollar has been pretty strong overnight and they haven't moved so much. So it seems that the gold market is still very comfortable around 1800. Copper maybe actually going to make a move, which is kind of curious. And as I had just mentioned here, the dollar, so strong, 96.8 now in the dollar index. Bitcoin, actually doing a little bit better than I would have thought given the dollar strength. But still just kind of skidding along 5,600. So that's where we're at. We are having the news here in 10 seconds. So this could be doozy. I can't trade this. Look at that no liquidity in the micros at all, and they really pulled. Look at that. Holy cow. 73. Okay, so the GDP is in line. Durable goods, ooh, negative spot 5 versus a spot 2. And the initial jobless claims a lot better than anticipated. Oops, need to be over here. There's just a whole swath of news coming through here. I need to adjust the volume here. Hold on a second. How's that? That's a little bit better. And do we have all of the settings here in the stream set right here? Public. Yep, I think it's just a little slow. I think maybe some people are thinking that because it's the day before Thanksgiving that we're going to have like a really slow day, but I don't think that that's going to be the case. Okay, so the liquidity is coming back here. I'm not sure if I can just pick a straight direction off of all of that news, because it wasn't like, okay, the jobless claims was good. So that's just one thing I want to know. 199,000 versus 260,000 was expected. So that's a good 60K less than expected. Durable goods was bad. I don't know if that's like disaster, but wholesale inventories 2.2 versus 1%. Goods trades balance was a lot. Oh, okay, that was pretty bad. Negative 82 billion versus an expected 95 billion. See, I'm trying to figure out what's the news that's pushing them up. I'm not sure I necessarily see it. I sit on my hands. We may be waiting until the top of the hour, because at the top of the hour, that's the piece of news that like that could have a dramatic impact on yields and really push a lot of people into the treasuries. But after that, if that doesn't happen, then I think that yields could decline. So, or sorry, if that doesn't happen, I think yields could rise. So, man, it's really easy to get things all mixed up in it. Okay, the U.S. jobless claims is the lowest number since 1969. Can you believe that? Wow. Interesting. I will retweet that. That is very interesting to me. While we're waiting around, since it sounds like it's pretty quiet over here in chat. Welcome here, guys. Let's check around social media, eh? So the German Coalition Party is talking right now. I'm hearing stuff coming over the news squawk. But my understanding is that there's supposed to be something at 9. So I don't know if it started. This is the pregame or what the deal is there. Teleb active pretty early today. Who am I? I get so many messages on LinkedIn. I'll have to respond to that person. They must be a recruiter. Yep. TDA creative. That's funny. So something that I find really frustrating. So I like where I work right now, right? Hold on a second. Oh my gosh. They're getting so many things from the news squawk, and it's like all this stuff about German politics that, like, I don't. What is he even talking about? Anyways, I'm quite happy in my current job, but I would love to have a job that is more in finance, and makes use of my trading skills, because I feel like at this point that, even if I wasn't directly trading, that some of this stuff that I know now, could make me twice as much as I'm making now if I found the right position. Which, I'm not willing to move. I really don't want to move. That's kind of the problem. So, but I'm trying to get more involved in LinkedIn. I've found like a bunch of researchers and stuff, and I've been following their stuff on LinkedIn. Man, LinkedIn is the place to find those guys. And so I'm active on LinkedIn, and because I'm active on LinkedIn, I will get recruiters message me, because I'm like, well, if it's a finance position, maybe I'll take a look at it. But I just get quite asked about my tech skills. But the thing that's been frustrating is that because of the pandemic, like, every job is remote now. Every job is remote. So like the number of potential opportunities that there are out there is like quadrupled. And so you get so many messages from recruiters and stuff that look at your profile, and it's kind of annoying because I try and do everything that I can to let them know like what I'd be looking for, but they don't care about that stuff. Okay, now this is curious. The treasuries here are dumping pretty hard. Was it something that they just said there? ECB can best execute its mandate if EU member states keep to their financial responsibilities. German coalition agreement. German coalition parties declare they take rising inflation concerns extremely seriously, maybe? I think that because I don't completely understand, that I need to be a little bit wary. Being now almost pressing 1.7. We're just a little jump up there, and we'd be at 1.7. That would be pretty crazy. It was actually, so in cumulative delta terms, it was actually pretty dramatic amount of volume too. Oh man. Well, Wow. You see them skip there. Kind of weird. Okay, so let's just know yesterday's low in the Treasury in the 10-year was 129.19. Loy. Does look like they're reverting a little bit here, though. Was a pretty dramatic change in volume, so would very much make sense that they would get sucked back up into the hole here. And again, there's still this risk that there's going to be COVID restrictions. Now, the thing is, the press conference that I was told about was supposed to be at 9 Eastern time. But it was German coalition press conference, which is happening right now. So maybe the time changed or I had the time wrong and that was it. Maybe that's why they sold there, was because they didn't say anything about the restrictions. I don't know. I'm gonna wait for that squawk to show up on Twitter, but they were talking about people taking unhelpful oil positions. Have you seen that? Like the administration has been talking about that, saying, like there's some manipulation going on in the oil markets and stuff like that. And I'm like, I don't. Okay, or maybe maybe there needs to be more oil supply, and you should be nice to OPEC countries. Like, I don't know. Because I should also note that this move that we had down and now back up, and that's pretty aggressive back up too, I would say, was very much across the board. Now, this recovery here, pretty low volume, yeah. So this is definitely a we have low liquidity, we just get sucked back up. But given that like the origin of this move was at 25 and it stopped there, you kind of have to wonder a little bit. Hmm. What's this from Pantheon Macro? Our chart of the week shows that exports in Indonesia are growing briskly, despite the plunge in China's PMI import index. We are confident that the final details of the October trade data will show that coal was the main driver of the 16% month-to-month leap in exports to China. Ooh, okay. I smell you just stepping in there. Okay, so we did see a bit of a move here. It is a little bit flattening. This is a little bit flattening, but now, oh man, the 10 years is going to be at new lows, I guess. Oh, that's not quite new lows. 22 is, in fact, was from before. Nassim Nicholas Taleb tweeting, pension funds should never rely on correlation, from the Journal of Alternative Investments. Ooh, I'm going to read that. If he thinks it's important, then we should read it. Pension funds should never rely on oh, and it's a paper that he wrote. Read paper. November 2021. Hey, it just came out. Well, we're gonna read that one. That sounds like just my sort of thing. Maybe we're gonna get 1.7 today in the 10-year. I don't know. Do we know? Okay, John Kemp asks, do we know who has been advising the White House on its oil price strategy, and especially the emergency stock release, not the political principles like Dees, Sullivan, Gronholm, etc., but the inside and outside technical people who advocated for the release? I'm curious. Oh, Is he suggesting grift or something? Because they're all, it seems like everybody in the oil market thinks that it was a dumb move. Yeah, it seems like everybody in the oil market thinks that it was a dumb move, but so at first it looked like we were flattening, but the 30-year caught up. The 30-year did catch up. But that really just has like all of them going down at the kind of the same rate. They're all kind of in a similar spot. 10-year, a new low by a tick, the other two not quite there. Next, tweeting a bunch of stuff. This report lists custodian failure, fraud, liquidity, and lack of legal clarity regarding rights to assets as vulnerabilities all fall under the main overlooked issue referenced above: failures or deficiencies in the provision of basic banking services by third parties. Yes. Germany will stop funding renewable energy once coal exit is achieved. Oh, that's an interesting one as well. Kind of wish that I would have been able to catch 67. Okay. The 5-year kind of looked there for a second like they were going to break, and then it quickly stabilized. And as such, slight bit of steepener as the 10 and 30 push down to new lows, and the 5-year yet to do so. Although they're so close that if the 30-year really continues that push down, it's going to get dragged with it. And let's just reposition everything here. Now, the S&P 500, not so happy. And it seems like that ever since the yields started going down, that the S&P 500 started going down. And things even back out. Okay, that time they all went together. Ooh, Bloomberg tracks the 53 best, worst, and best places to be during the pandemic. Oh boy. I don't know if I should click on that one. That sounds controversial. Oh man. So I see steepening here again a little bit. So this time, the 10-year, the one lagging a little bit. When before it kind of led, right? It touched new lows first. Okay, a little bit better of a downtick. I don't know if that's going to be enough to hold, but this is better looking at the very least. Nope, actually that was a pretty aggressive buy there, right? Or a click. There was a click, clicky click. Yeah, the ask pulled. Ask pulled and somebody immediately bought what was left. That might have been all one action from one person. Although if it was all from one person, they're probably not too happy with it at the moment. Because the 30-year ticked back down. Remember yesterday I briefly mentioned there was this poll showing Donald Trump winning in key states and basically suggesting that if the election were reheld today that Donald Trump would win. There was a lot more discussion about that poll than I realized there would be. And I fear that it's adding to a series of I want to say like a chorus of events and voices that seem to suggest that Donald Trump is gonna run. Not too sure how I feel about that, but that is a big order showing up there in the 5-year. Being a little too tepid there at 21. Like not very many people sitting there on the bid, but they're not really getting hit. And the 30 years still seems to be leading the way. You note the 5-year yields at least have not really moved yet. We're getting decent enough exposure to it from the 10-year here, though. But they're, for the moment, they're having trouble pushing down. So I mean, it actually kind of looks like the 5-year is going to actively fight it here. Wow, we've seen how that has happened in the past. Like when we're okay, he just moved. He moved, right? Was that at 31.5? I don't recall anymore. But what was happening when it was the 30-year that was lagging is, eventually when it dropped, it really, really dropped. So do we see the same thing here in the 5-year? The 5-year kind of fights it, but then when it succumbs, it's going to be like, okay, yeah, see, it is moving. Now it's at 121 even. And he actually moved up. Yeah, I've seen this before. Shoot. I've seen this before. This is a game that they play in the spreads. Now there is some big orders there in the 10-year, right? So man, four tick spread there in the 30-year. That's a kind of nasty. Maybe JPAL says something for minutes. The minutes might move the markets for sure because you're going to see how concerned the board really is on all of this inflation stuff. But yeah, I mean that's I don't think we're going to be around for that. Although we did get a pretty strong downtrend there, you know, like okay. We want to be careful. Okay, yeah. Who mama. Okay, so what I was gonna say was because you get these big orders going around and the 5-year chasing it. Okay, so somebody just said something. So it was a speaker. Fed's Dali is speaking right now and was saying that they would be in favor of accelerating the pace of the taper. Okay, so what I was going to say is because we get these big orders here doing a spread trade between the 10 and the 35, the 10 and the 5, and they're chasing it around, you could get something where it moves very quickly. You can get these spots where it's going to move very quickly because these orders are chasing them, right? There you go. That's it right there. Can bank stocks be a good hedge? I don't know about a hedge, but I am bullish on bank stocks for sure. Yes. Especially this past day. It's been pretty good for them, right? Man, did the 5-year move there when they filled that guy, didn't they? that was one where That's just experience. I've only seen that like once or twice. But here's something that you can take from that, because that whole setup and what it's going to do there is really questionable. But here's what I can tell you: when you start to see big spread trades, they tend to move. Okay. And the S&P 500 continues to be unhappy with what the interest rates are doing. Well, I did want to add back here, I should be more aggressive on them, huh? This spot, I don't know if that makes sense, but that was a pretty aggressive move there. I'm just looking back at it and thinking about it, and I was like, okay, 19 was the low of the year. That's why they did that. Man. Yeah, Fed's dally. If the job market continues to perform well and inflation rises, the taper could be accelerated. Yeah, that was the thing that he had said that caused that move, I think. The 5-year still a bit up. So, oh, that's interesting. Oh, okay. But when the 5-year dropped, it like really dropped. So we saw the spread there flatten considerably off of that move. But now, as we come back, maybe we see the 5-year come back a little bit more because of that as well, and then it steepens back out. But with the way that the liquidity is sloshing around here, the spreads might be a little confusing. that was really that really looks to me like the market was not prepared for that, right? Okay, yeah, well, I will talk about the spreads here. I don't want to get too engaged in it because the Fed's dally is still talking, and they're seeing another further move. Make it stop, Seth. Make the pain go away. What happened there, Cages? You okay? Did you try and buy the treasuries or something? I hope that's not what it was. The real trading is back. I don't know. This is not necessarily what I would consider to be like a really good market, you know? Like we're going to make some money from it. Anytime that the liquidity is kind of constrained, that provides a little bit more room for us retail traders. But is it safe to short 001? Oh, I don't know, man. I'm thinking about that right now myself, as in could I potentially add here? The problem is that again, going all the way back up in the 5-year, like I think it's the 5-year that we want to look at. 31. Wow, was it 31 too? Good grief. By the way, when my 5-year trade, where was that? 35. Oh my gosh. I so should have held that. What a mistake. It was like it kind of wasn't working out, so I got out, but if I had held that, that would have been an amazing trade. That would have been $20. Anyways, so you just got to realize that the latent liquidity all the way back up to there in the 5-year could be still damaged. So we probably do have a little bit of a vacuum above us, although in the 10-year and in the 30-year, 30-year really seems to be balancing around 159, and the 10-year, maybe it will do it at 18.5. So because they are kind of getting sucked back up here, and we should remember that it was on news too, right? So in terms of like, can I predict that? I don't know. I mean, we're already getting some excursion behind it, so I'm not 100% sure if that's the best spot or not. But bigger picture though, the kind of action that we're seeing does tend to result in pretty solid trends. More again from Feds. Dally says has a strong bias to stick to the current planned tapered pace. Oh, okay. Talk all hawkish, and then make one little statement that's like, but regardless of everything else that I just said, I think that we should keep the pace the way that it is. Okay. If we all shorted at the same time, we can't lose. It would have an impact. Probably would have a short-term impact if we all got in and shorted the ZV at 159 even. 5 retail traders all went on, in a row there, all trickled into it. They might pull it, yeah. Especially with the way that the liquidity is right now. Those market makers are probably going to be paying extra attention to any kind of incoming flow for signs of informed trading. So now, after saying a number of things that the market interpreted as very hawkish, he is now saying some dovish things. This is a huge shift from Dally just last week. She said, I have a strong bias to stick to the current taper pace. Oh, but then they were saying, when was this? Oh, that was from earlier. Oh, okay. Dally says has a strong bias to stick to the current planned taper pace. That was on the 16th. I misread that. I'm sorry, my bad. What we're seeing right now here still looks like liquidity hole, right? There you go. Patrick Rooney retweeting Sven Henrich. Highest inflation in 31 years. Lowest employment claims in 50 years. And the Fed says we can't raise rates from zero or markets will get upset. Yeah, it really is. It's like seriously, with the data that we got right here, I say the Federal Reserve should be raising rates. They should have already tapered. They're behind the curve. Come on. Hello, speculators. Hey, yo, how's it going? When I started this session, I was like, am I going to be all by myself today? Because it started out slower than usual. But we started to get some movement, didn't we? Oof. Well, may have missed my chance there. It's probably, honestly, it's probably better for me to keep the risk low on the lower side here while Dali is still talking, right? Live Action says I was here early watching you talk to yourself. It was like normally when I start the stream, there will be like 2 people waiting, and we'll get up to a dozen people pretty quickly. But today, it stayed at 2 for a long time, and I was like, okay, like they don't think that anything's gonna happen. But you guys definitely picked up the activity here once the treasury started moving, huh? You had to get bagels, says Izzy. Oh, you missed it, dude. So if you weren't here when the 5-year dropped, what happened was we were getting a pretty aggressive move down, and then the 5-year was holding back because there was a big order in the 5-year. So it didn't fill that big order, and when they started ticking back up, that big order started following it. And they followed it all the way from, it was at 31 3/4, all the way up to 01. So it was like from here to here, right? That was a pretty big move. And at the same time, you're looking over here in the 10-year, and there was a big offer. So we're sitting here like, And then they came through. They filled the big order at 121 even, And when after they filled the big order, then Dali started saying stuff and it went zoom, zoom. So I had an order in the 5-year at 35, 1.35, and that I dumped because I wasn't so sure that they were actually going to flatten anymore. So I got out of it. And I should have stayed in that one, but it's okay. So now we're back to the spot where I kind of wanted to add risk in the first place. So like the problem I keep having is like, would have liked to have taken 685, taken it off at 695. You know? Now at this moment, I'm a little bit nervous about adding risk. A drama sale in DAX. Any good news feed for small cap stocks? Oh, I don't know. You know, Financial Juice is starting to do stuff like unusual activity, but there's other stocks might be better in that respect. I think Benzinga does a pretty good job. My understanding on that one. I was making a video yesterday about Black Friday sales, but then after I recorded it, I was kind of like, I don't like it. But I will tell you, I have some. Oh, I should put them in the video description. Let's go fix that. I've got new links from Jigsaw. So now if you purchase Jigsaw with my link, you get a discount. You get a discount, which is really, really cool. So that means that you can get Day Trader Independent for like $479 instead of $580, right? And you can get your Journalytics subscription for $299. That's a year's subscription. That's a really good deal, by the way, guys, because even if you don't use Jigsaw, it is compatible with other platforms. I'm not sure what the details on that are, so you're gonna have to go in and look at it and see like if it's compatible with your platform. But yeah, it is without question the best journal out there. Best trade journal out there. You can go and put notes on individual trades and it gives you great stats and stuff. And there's a lot of people out there trading that they really don't have any long-term stats on their trading. And I'm just like, how do you trade like that? You know, how can you trade and not know like what your win rate is over the past month and so on and so forth? How do you ever track your progress? So that one is a good deal. Let me put it here in the video description. Mm-hmm. There we go. I'll save. I'll put it in there like that. Journals is something I like to organize for data analysis. Yeah. There's a lot of guys, though, that just don't have it. Everyone already owns a lifetime. No, I don't think so. I actually think that most of my subscribers are on Sierra charts. I actually think that there's more of you guys that watch the stream that do Sierra charts than do Jigsaw. Captain Price says, I've been using Sierra. It's fine. Yeah. The 10-year kind of showing some uncertainty there in the 2020 half area. Yeah, Zero Charts has been a pretty good software package, but now that they're kind of moving to their own data feed and all that sort of stuff, I'm not as don't like that as much. not as into that, but yeah. I would be yeah, no, Eric, just I would be very, very wary of stuff that you've downloaded off of like some Russian website that purports to be Jigsaw. I remember when that happened, and like my understanding is that nasty things happened afterwards. I would be really careful, and I certainly wouldn't be telling people to go and find them. But I also don't think that those are up anymore. I assume latest year versions won't support with. Yeah, I mean, it's the same thing with NinjaTrader. Like, you go to the NinjaTrader brokerage. If you're using them as your FCM, you don't get Rhythmic. It sucks. It's not as well, I don't know the whole story, Air Cages. I try to stay as far away from that stuff as I can, but there was like they took it down. Kyle Rittenhouse blames former lawyers for Proud Boys photo. Oh yeah, have you guys heard the stuff coming out of Kyle Rittenhouse's interview with Tucker Carlson the other day? And he was basically saying that Lynn Wood and the other lawyers that he had at the start were really bad and took advantage of him and did a number of things that hurt him. Like they kept him in prison and didn't pay bail for longer than they needed to. Like he was in jail for like a few weeks when they already had the bail money. And now he's blaming them for that photo of with the Proud Boys. Yeah, now in Sierra, you can get Sierra to do pretty similar things to Jigsaw. So that's the other thing that I don't like about Sierra charts, and frankly, this is just kind of like a more rule of thumb for software. But when you've got like a bunch of different competitors for a particular thing, it's one. There's kind of two ways that this will go. One will be like, oh man, I'm having a hard time thinking of an example that will like you guys will all really be familiar with. But I think as I talk about this, it'll be like, oh yeah, you think of all of these examples, right? So sometimes you have a situation, well, like for instance, Intel and AMD. So Intel is the leader in the processor space, right? But who's innovating right now? It's AMD, and AMD has been bringing price downs and has actually forced Intel to have to compete, right? And in those situations, that's when you want to be with the little guy. And there's some real advantages to being with the little guy. In AMD, you got some good performance for a low price with AMD, right? But sometimes what will happen is you'll have a leader, and then you'll have a backbiting competitor where they don't really bring anything new to the space. They just copy what the leader does for a lower price, and that's what I feel. That's what I feel Sierra Charts does. They don't really innovate and create new features or really take things to a next level. They just steal features from other people. And so kind of what happens is, one, you're always a step behind. And two, you kind of get this application that's just like a smorgasbord of what the heck. Do not take our church Sierra Charts and everything. Dude, you listen, if you're using Sierra Charts, you have to admit it, right? They copied all their features from other people. They did. What they did was they said, we're going to copy everybody else's features, but we're going to do it in C++, and so that you're supposedly have a faster and more stable platform. It does appear to be pretty stable, but I haven't used it very extensively, right? Well, what happens is you don't, number one, you're not going to get the new features as quickly. Number two, they tend not to do as good of a job, right? So like that's really clear in the way that Sierra Charts is like laid out, right? Everybody says like it's a great piece of software, but it's not very noob friendly. There's so many little options in there, and they're not organized very well, and it can be really confusing to sort out where things are coming from, right? That's the thing with Sierra Charts. And why is that? Because basically they see a feature out there, the business guys go to the engineers and say, we need to add this, and then the engineer finds a way to add it in there. But it was never like their idea. It wasn't something that was kind of like organized and carefully laid out in a long-term strategy to allow this feature and this feature. You know what I mean? And then the other side of that, and the thing that I think that you're seeing now, is that they're going to be more money grabby. So when it comes to, okay, we can either be an open platform, or we can start to get our own data feed and start to make money from the data feed and from locking people into our own ecosystem. And so what do they do? That's exactly what they do. People just can't read manuals. Well, but like I shouldn't have to read a manual to be able to know how to pull up a chart and place a trade. If you design a good system, you will be able to figure those things out intuitively. What's a new innovative thing that Sierra Charts does not have? Well, what's the most recent things that we've had added? Well, for starters, they don't have journalytics, right? But, it was like when the Vista charts came out, right? It was longer until the Vista chart was there. I know I'm treading on shaky ground, because I know that a lot of you guys go to Sierra Charts because it's cheaper. Jigsaw's not faster. They're going to be pretty much the same, right? If you had them both like that, does Sierra Chart support the rhythmic plugin mode? So I'm sure that if you put them side by side, both of them going through the plugin mode, that they would probably update at the same time. Although the way that Sierra Charts updates things is different from the other platforms, and it does kind of matter. If you were writing an algorithm, it would really matter. So like at least in NinjaTrader, the way that things happen in NinjaTrader is there's just an event every time that a new piece of data comes in, and then it processes that piece, it runs that method and it processes that piece of data. And the order that updates could potentially happen in could be very weird because they're all running on different threads, and it all just comes down to how your processor schedules them, right? There's all this concurrency and stuff like that. Sierra Charts, on the other hand, kind of runs like an update loop instead. So it has this update loop that runs every X milliseconds, and all of the updates queue up. And then when the update runs, it will process all of those transactions and then move on, right? So if you perchance run into a situation where a ton of updates came in all at once, you know, as it pertains to your algorithm, that could matter, right? What the actual implications of that would be, I can't say, but it would behave slightly differently. You get all, no, that's not true. You have to pay to get all of the features. You have to be paying for the slightly nicer package. It's like $35 a month, right? To get all of the fancy features in Sierra Charts. Whereas in NinjaTrader, you have to pay for the full license, which is like $1,000 one time. Oh, dude, Uzi, yeah. Is Biden's narrative really that oil companies are profiteering off American families, so he's sicking the FTC on them? Yeah, that to me seems to be like transparent bullshitting, right? Like, there's no way that in the administration that they think, oh yeah, oil prices would be perfectly fine if oil companies were not trying to profiteer off of the backs of working Americans. No, there's no way. This is what they did, is that they said, okay, we decided that we were not going to be allies to the Saudis because the Saudis do mean things. Donald Trump, they made an agreement with the Saudis. So you notice that ever after they made the deal with the Saudis, all of the things, particularly having to do with oil, always went in Donald Trump's favor, to where it was like they were able to, I think, didn't he release some stuff out of the SPR? And then they went and they bought it back out at like historically low prices. They filled the SPR with historically low prices, right? How did he do that? Because the Saudis were helping him, man. So they're looking at this. The Saudis aren't helping us. What can we do? And so they tried to do that organized release. Well, maybe if we all release our SPRs, that will kind of scare them. But I don't think it does, because I think that the Saudis have all of the leverage in this particular instance, right? So then they say, well, how do we deal with this? Because this is hurting our poll numbers. Well, why don't we start blaming the oil companies? I'm going to bet you that that's how the conversation went through as well. We can start saying, we can get the FTC involved, and that might take the heat off of us, right? But obviously it's not going to have an effect. If anybody is sitting there saying, okay, now that the FTC is going to look into the profiteering, maybe now the price of oil is going to come back down, and you're going to make a bet on the price of oil declining because of that, you're going to lose, right? NinjaTrader is somewhat fair because it's now brokerage and gets fees lower for a full license. Yes, it does. Listen, $1,000 for a platform is not unreasonable, right? $1,000 for an indicator package, what the F? And I see that so much. Thousands of dollars. I've seen indicator packages that are more expensive than the trading platform itself. And I don't see how you justify that price. I mean, well, the way you justify that price is that there's people out there willing to buy it. But the amount of work that goes into it is not worth that much. I'm sorry. If your main platform is worth $1,000, then an indicator package that runs on that platform ain't worth that $1,000. Your indicator bundles wiki trends for $5. Some of them are pretty silly. I mean, my indicator package is probably underpriced because I don't really want to spend a whole lot of time marketing it and stuff. I should probably hire somebody to market it for me and up the price and do a one-time thing. One-time price instead of a subscription. Your $15 offer for what? You can click the join button down below and you get access to the indicators. That's why they buy those darn packages. They want to make money and they don't know how. Yeah. And that's where it kind of comes down to, you know, the market is from the best evidence that we have, the market is more statistically efficient than it is informationally efficient, which means that you're much more likely to find an edge through what you know about the markets than you are from some indicator package. And ergo, all these indicator packages that people are charging people for aren't worth it. Now, on the split side, a news squawk, it's totally worth it. Okay. $1,000 for a lifetime membership at Financial Juice. Can that pay you back? Yes, 100% it can. When you realize how much money you can make just from trading news, if you get good at it, and I'm not saying that you're guaranteed to make money from it, certainly not, but the potential for you to make money from there, Financial Juice is very, very cheap. Yeah. And there's an affiliate link for that in the video description. And that's the thing. I don't put affiliate links. Do you have any idea how many people try and get me to sell their crap? Man, it's like every other week somebody will come in with some new service or something. I'll look at, and there's interesting services and everything, but like one of the big problems is like, how do I know that because it's usually some sort of technical thing, right? So it's like, okay, well, like, do you have historical data on it? How am I supposed to know that it's any good? You're just expecting me to hawk this to my viewers and subscribers, based on your marketing and not any actual empirical evidence. Like, do you even watch this stream, my man? And this happens all the time. I could probably promote all sorts of things. Yeah, that's interesting, Joseph, that you're using Motive Wave and then Jigsaw for execution. That's a setup that I haven't heard before. Well, I guess I've heard of it because I knew that they had a bridge over there, but well, actually, maybe no. Are you using it through Rhythmic? Is that how you're doing it? Is Rhythmic plugin mode? But anyways, I've never met somebody that was using the two of them together like that. There was a little bit of selling came through there in the 30-year. It seems to be coming in the 5-year more strongly again. Kind of probably missed the boat there again. Both on Rhythmic, yeah, I getcha. So flattening again. What is the ES doing there? So we're getting a lot of clicks because there are some big orders moving stuff around in the ES, but I cannot make heads or tails out of what is going on over in the E-mini. They may be heading down though. You missed. Well, this is my problem with NQ. It's like I really don't feel like a human can be fast or efficient enough to trade that one, you know? Well, I'm not. I'm really not liking the flattener here. This is why I originally put one out in the 5-year, and I'm so frustrated by that, man. Hey, Laser Eye. That's the name. I remember you coming in a long time ago. Welcome back. And if I'm wrong, then I apologize for confusing you with somebody else. Oh man. It's a chance to add there, but because the spread's not going in my favor, I don't think I want to do that. I think it would be better for me to maybe try to take it in the 5-year if I so chose, but they might gravitate up a little bit again. It's kind of starting to look like that decline below the yearly lows was an overreaction based on something that Dali said. And I'm not sure if we're going to be able to get enough selling to like go back down there today. But it could happen. It could be like a later in the day sort of thing, like it has been happening recently. And we are likely to get another move here of some sort in the next 30 minutes. Can't lose if you don't. That's not how it works. I like to hang around when I'm able to day trade, yeah. Oh, I got you. You're not always able to come in. But today is, you maybe took the day off, huh? Hmm. It's been a little frustrating because I'll be like well positioned for some moves and they'll just kind of slip through my fingers, huh? But that's just kind of in part the market that we're in, right? It's just like low liquidity and all that stuff. They did a little head fake us on us there. I wasn't the only one that was a little bit concerned by that. So that puts us back to break even on the day. We are going to get some numbers here at the top of the hour, right? We got like consumer sentiment and stuff. Yeah. Personal spending and personal income are going to be the big numbers that we're going to want to look at, right? The liquidity in the micro 5-year is kind of weird. What do you guys think of the idea that the CME CBOT nice should be open? Well, the CME is open pretty much 24/7. It's only closed for an hour. You're on fire with NQ for change? Well, that's... You're doing good in NQ, then good for you, man, because it just looks like a total mess over there right now. Hmm. I was kind of hoping to get 36 in the 5-year, and it didn't go through. Bitfinex tweets bad news for the Tether fraud. Deltec U.S. accounts with Tether reserves could be shut down. Citibank Tether convinced Deltec Bank to open U.S. accounts in Deltec's name in order to disguise the real business, just like they did with Fowler. Okay, that's interesting. I'm not quite sure I understand that. It kind of looks to me like some people in the treasuries are picking up short positions ahead of the news here. And it really looks like a flattener again. Biden and Yellen will have tough decisions to make, keep markets up or crush inflation. Can't do both. Well, you don't have to crush markets. Yeah, news in 5 minutes. We're gonna have PCE. Oh man, yeah, PCE is a big deal. Personal spending, personal income, consumer sentiment. It makes sense for them to be trying to set up positions here. Just we should just realize that they're probably relatively speculative trades, right? Oh my gosh. Biden administration has no plans to send anyone to Waukesha after Christmas massacre per White House official. What an effing joke. How do I want to do this? I'm going to just bring this down here. What's that tab? Okay. Oh, there's a 4-week bill auction too? Good grief. Okay. Now we'll see how much the markets pull the liquidity here when it comes to that. What's your take on Bookmap? It looks like a good platform. I still prefer Jigsaw. I'm a little. I'm not a really big proponent of what the Vista chart or whatever it is that they call it really adds. That you don't get from the DOM, but seems kind of overpriced. I mean, well, it's popular. Like that's the thing is people see the flashy chart and they want to get in on it, right? So it's a pretty popular platform, and it looks like it works for what it does. But I just don't think that it's as good as a solid DOM. And they do have a DOM; it's just not as good. But I wouldn't say that you're going wrong if you get it or anything like that, right? Okay, so here's the news. I'm not seeing like super clear pulling per se, but I am seeing a lot of activity. I am seeing a lot of activity, so we shall see. Okay, well the micro's pulled, and it looks like the ES did too. Sorry, the main treasury did too. Okay, consumer expectations look like they're pretty okay. Personal income was really high. Oh man. Okay, so personal consumption was spot 7 versus expected spot 5, and income was spot 5 versus expected spot 2. The PCE price index came in line. And the University of Michigan numbers look like they're all okay. Not the core, but the main PCE price index was spot 6 versus expected spot 7, so that's slightly lower than expected. So it looks to me like the PCE is kind of like, but I think that personal income and personal consumption numbers are a little concerning. It looks like they're gonna read that as lower interest rates, though. Oof. Really? Okay, well. Darn. So the 30-year is really coming back hard there. Yeah, this sim trade here, I kind of felt like, let's right there. So now this might not be done. We could still flip back down. In fact, they're already kind of really. I don't know, man. NQ taken off there. So I think that the market seems to be more interested in that PCE number. I would say that the number being in line with expectations is not necessarily like good, but so again, PCE was spot 6 versus an expected spot 7, and core was spot 4 versus an expected spot 4. So I'd say pretty much in line. But just note that personal consumption and personal income were both higher than expected. So if I had really like stayed risky in those positions, it probably would have come back to my break even, but the 5 years still kind of looks like the way is open for them to move down. What, you along the E-mini? Yeah, it's like they wait for me to get in, and then they move it. So my timing is all off here today. Oh, because I see what's going on here. Okay, hold on. So that 30-year is really pushing. We're getting a lot of flattening here, man. I don't know. So the ZB kind of backed off of its highs. So we'll see if they continue moving down or not. Yeah, if I was long the E-minis, I mean, it may be liable to be a chop fest, but I think that if it was me, I would be trying to hang on to it. Although I don't know about if I'd want to hold it through the holidays and all that stuff, but I still think that December will be a good month for stocks. Might be mixed. Like some stocks might do well and others do really poorly, but I think overall money is going to be coming into the US stock market. Okay, good solid downtick there, although it looks like it's the 30-year that's going to be moving around. I could do it there. I don't know, man. I don't know. The 10-year yield, not the 10-year itself, but the 10-year yield is still kind of where it was. Oof. Alligator says he finds it excessive. Yeah. Well, it looks to me. I'm wondering here in the Treasury if the call wasn't like, okay, that should mean lower rates, so much as the call was, okay, we're going to flatten even more, because the ZB took off on that, and the 5-year is just getting crushed, and the volume is all short in the 5-year, man. But those spreads all flattened across the curve. Even the 2s and 10s flattened. FTH says a nice sell coming. Which asset are you talking about? Well, I feel a great deal of uncertainty over where the interest rates are going to go next year. By the way, one thing I didn't check was new home sales. Okay, spot 4 versus 0. I'm kind of thinking here about the action we've seen in the treasuries, because I would say it's been a bit of a tough call. Even off of that news, the way that it moved, it was not really what I expected. We had some really aggressive moves down, and we've had some pretty aggressive. I mean, the ZB really aggressively moved up there, right? And it kind of is acting like they're not done. Maybe they move up here. I'm not so sure, but I'm wondering if today's events doesn't lead decrease volatility in treasuries. Well, I'm going to try one more thing here. Yep, I don't DJ very much anymore because I go to bed early, but I used to do that pretty extensively. In fact, the CEO of Goldman Sachs, I actually talked to him about it once. We didn't get to talk for very long. He was very busy, but we did talk about it once. He came to Salt Lake. They had told him about me. David Solomon, that is, because he DJs. But I don't really do it anymore because it was all stay up late and build connections with people, and I didn't really enjoy that game. and then when I started trading, I was like, no way, I'm gonna stay up all night on the weekend till 2 a.m. No way. And got kids now and all that, so. Well, the 5-year seems to be pushing now. Oh man, am I? Oh, well, I don't know. The 30-year could still lead us here, but it's kind of starting to look like that if the rates are going to go down, there's going to be more in the 5 than it is in the 30. Maybe not. They ticked back down. Okay. Not only did they tick up, but the offer at 29 pulled in the 5-year, that is. E-mini off of its highs, but holding that decently. I'm not a DJ, but I play one on TV. What? I've been trying to play the spreads a little bit here today, and it just hasn't been working out for me, has it? So I'm not quite sure how I sort that one out. Well, there was a strong little move there. You know what happened there was a bid pulled and added onto the ask in the 10. This is a little weird. But he's a little out there. So that might be a robot placing liquidity a little bit out, you know? Deciding, okay, maybe they are going to go long. So I don't think that this is too relevant to either the market or the politics, but I see people on the right very upset about the Woquacia, I don't know how you say it, right? This attack where 6 people have now died. And here is Jack Procevic saying it was not an accident, it was an attack. And they seem very, very certain about this, but I have yet to see the evidence that conclusively proves his motive. I'm not even sure if his motive is going to be an issue that the prosecutors try and bring up with him. Do you like Wyckoff? I mean, with any system, there is going to be something that you can pull from it, but I think that there's a lot of people out there have been pushing the Wyckoff method, and it's mostly nonsense the way that they're talking about it. It's technical analysis in the end. I think that it can be useful to think about, you know, how things move around and everything, but trying to look for some pattern to predict then it's gonna where it's gonna bounce and everything, it doesn't work like that. Okay, so did we flatten or steepen? We didn't do either. We just all moved higher. Well, this is going to be interesting if the 10-year gets back up to its opening price, isn't it? I think that you may be getting some shorts unwinding here now at this point, because they're kind of above where there was like a lot of short interest, right? Where is it? Right there. Yeah, starting from that big move when Dali was talking from 23 down to the lows. Yeah, so now you've had about equal volume coming through because of inverse sine law. This is going to have a larger impact. So the 10-year may have yet more to go. Now, at the same time, there appears to be another large order in the 5-year chasing that. Kind of like we had before we had that drop. I feel like that my words there with Wyckoff weren't very carefully considered. It was not as eloquent as I would like it to be. I should try and come in and just be really final and on everything, right? Wyckoff, it doesn't work. It's bullshit. It's more technical analysis. I'm sure that there's some useful things that you can get from reading his books, but it's still a price pattern. There. I'm happier with that one. Hoover says it will shut down operations in Brussels from Friday, November 26th following court ruling. Ooh. Okay, so by the way, you got a pretty good extension there in the ZB. There was some last pivot high is at 27. Lucas says not rolling it. No. And the micros, I'm not going to roll until it is actually the last day of the month, right? Or is there something else I should be rolling that I'm missing, Lucas? Oh, you're so much better at that than me. I usually don't notice until Ninja Trader tells me to roll. I think you're right, Elliott Wave. Okay, so explain this one to me. You weren't around here, Kate. Let me find it. Google poll. I forget how to do it. I forget what it's called. Google survey. Maybe it's Google survey. Google Forms. There we go. So I made a survey. It's since had 73 responses. What strategies or forms of analysis do you incorporate into your trading? Price action, one of the most popular. Stuff that I actually think is a really useful pricing models. Not hardly anybody. Wyckoff method is pretty unpopular. Elliott wave analysis is not. Okay, then there's things. What do you intentionally exclude or believe do not work? Elliott wave analysis with 33 responses, far and away the most popular response. What's with that? Lucas says not better. No, it totally. I'm sure that we're both awful about it, but you're probably a little bit better. Oh, I guess what you're saying is that we will. No. Because final call will be on the 26th. So I don't think in this situation you want to roll. Could see some weird behavior around that, but yeah. I just what is it about Elliott wave analysis that people don't like? That was a result that I was really surprised about. Fundamental analysis was also very high. Chart patterns being high, that's good, I guess, but most of my responses were from futures traders, equity index traders, taking 1 to 5 trades per day, their win rates. Win rates was also really interesting, but it was way more varied than I thought. The number of people that were doing win rates over 50%, basically risk arb strategies, it's actually the majority of people, was a little eye-opening. Little bit of a pullback there. Should I be concerned about that? I don't know about that. Five-year did come back a good clip, though. And big order is still kind of trailing it. Let's see here. Base shows 60%. No, scratch that. It's less than 50%. Actually, open interest is higher on backtracks contracts, so which makes sense. Yeah. Especially when you've got like a bunch of news coming on right where around first call is going to be, you're gonna see it's gonna take, they're gonna try and trade the front month first and then move over. But because the last call will come on over the holiday, you get kind of a weird situation, huh? But I don't necessarily care about these ones up here. I didn't even think about that it was. Sorry about that. OBS died on me there. I think we're okay though. Those look like they're moving back up here. My live trading license with Jigsaw expired and I don't want to renew it just before December when markets calm down. I'm using the Ninja Super Dom and it sucks so bad. Oh, Lucas, I get what you're saying. You don't want it to renew at that time of month. I totally feel you. I've done that before too. I would be really careful about taking trades because when that happened to me, I ended up screwing up and lost some money on a trade that I really shouldn't have. Yeah, Ninja Trader's Super Dom really is terrible, isn't it? There's some oil numbers coming in and my news squawk is talking really loud here. Is that a big beat or something? Oh yeah. Bigger draw on distillate inventories than expected and a bigger draw on gasoline inventories than expected. No. So in the Ninja Trader Dom, because they don't have this whole this whole deal with it centering and moving around correctly because of the patent, you know what I'm talking about. If you mouse over any price, it will pause while your mouse is over it. So you can't sit there with your finger over the button like you can in Jigsaw. Lame, right? Well, when I first looked at that last pivot being at 27, I was like, that sure looks far away, but it sure doesn't look very far away now, does it? There's a big order there in the 10-year that they seem to be shying away from a little bit. That maybe still just be part of the spread trade, right? You have to actually pay a higher commission if you want the static DOM version. Yep. It's so dumb, right? Okay. There was some signs there, 23 pulls. They didn't trade through it, but they were there. This is still looks a little slippery. You like to trade on the rhythmic DOM? What do you like about the rhythmic DOM? You know what I find weird about rhythmic is that when you open it up, it seems like there's so many little complicated things and it's like, oh, maybe I could learn this. There might be a lot of interesting things to learn. But then when you go and you read the manual, it's like, it's stupid simple and you're like, what the heck? It's actually not as sophisticated or interesting as I thought. Yeah, anybody else like that? They've looked at rhythmic? Their rhythmic DOM does have a couple of weird things built into it that nothing else has that I'm not sure what the use case was for it. It had to do with the way you execute. It was kind of weird. 5 years sitting right there at that 30 and a quarter. Somebody gonna trade into it? It's primitive. It is a little primitive. You emailed me a while ago with one of their approaches. I'm not sure I remember that. Was that a long time ago when you sent me one of them? I don't know. Like it was so here's something that I'm kind of learning lately. Okay, so I went and I tried to find all of the researchers names that I recognized from research papers that I had read. And so I got on LinkedIn and added them all. And they were actually much more willing to add me as a connection as I thought. I think that they actually were kind of, well, I don't know. Like, so for instance, Beauchamp, I added him and I just said, just a retail trader that likes your work. And he added me. I was like, oh, wow, okay. And like, I didn't just follow him, I added him as a connection. So I kind of started going back and reading some of the other things. And in one of Beauchamp's paper, he was talking about how some people in the financial world kind of treat this, if you don't believe in the efficient market hypothesis, that you're like a pleb or something. So what I'm kind of realizing this week is that there's all of this research that is showing that orders are really what moves markets, and that really what you want to do is try and predict future order flows, and that markets are not informationally efficient at all. And the researchers are in on that. And there are some of the guys at the desks at the bank, like the GS desk that executes orders for the hedge funds. They seem to understand this, but like the economists in particular don't seem to be in on it yet. So what's happening is part of the industry knows and has realized this new information, but there are still very significant portions of the industry, very much legacy portions of the industry, that don't, which is kind of interesting, isn't it? But I, like I think of it as like my thought, and this is still kind of a developing thing, so I'm sure that we learn more about this. But when I was looking at it, it kind of seemed to me like, there's probably some guys that are in their 60s that have been running a fund their whole life, and they believe one thing, and they're not aware of this new research, even though it's been like a significant development over the last 30 years. And like, I think one of the big places where you'll kind of see this is that quant firms have been making money off of this. Like that's, a part of how, Jim Simmons is making money. And so people know that like, oh, well, okay, if these quant funds are making money, then maybe the efficient market hypothesis is false. But they don't actually realize that there's these research studies that like really strongly suggest that the efficient market hypothesis is false. There's something is primitive, but there's something very direct about it. Okay. No, that's very interesting. That's the first time I've met somebody that executed in the actual rhythmic DOM. So now I'm kind of looking at things here. The ZB did come back a good amount, but and the 10-year in particular seems to be, not there, hitting into resistance. But the 5-year, on the other hand, did seem to trade into the big order that was supporting them. So I'm a little about where we go from here, if there's another move up or what. One thing that we should consider, or well, what do we have to consider now? There is still going to be the FOMC meeting minutes, so that might put a cap on our upside potential here. And what else? I think going into the meeting minutes, though, I would rather be short treasuries, huh? But there's clearly some like really big spread trades going on here. And by the way, when we extended there, the flattening increased even more. So despite all of that, I mean, you come over here and look at the chart. Despite all of that steepening yesterday, they have now since wiped that out. And I wouldn't be surprised to see them go even further. China and Russia step up joint military drills. I'm starting to get a little bit triggered about Russia and China and potential future military action kind of stuff. I'm starting to get a little concerned about it. Am I just falling victim to social media news manipulation? I don't know. Maybe very well be the case, but I keep reading stuff and it makes me concerned for the future. Actually, every time that I read it, I'm like, China is just like controlling everything and doing all these psyops on Americans, and it's like we don't even realize it. Hey, Stick, how are you? I had to stop being that. Yeah. You know, it kind of goes back to that thing where it's like people want you to be concerned about every little pet issue that they have, and like no person can do that, you know? 5-10 year kind of dragged them down there for a tick. Stay one news source that has all the necessary information for you to trade. I wish it was that simple. If you're gonna pay for one news source, then I would be getting a news squawk like Financial Juice is probably your best option there, because it's only like $70 a month. That's what's going to be the most useful to you. But you know, a lot of it is going to come down to not just how much information you have access to, but your ability to correctly interpret that information and to find the pieces of information that aren't really correctly priced into the market, you know? This one here today, I think, is a little interesting because I don't think that this move that we're having is because of fundamental information. I think that the news that we got was not bad enough for the treasuries to go down lower, and since they had all already been so short, they all ended up having to cover. I think that's what's going on right now in the treasury market. The 10-year is still seems running into some resistance and selling. In fact, it's enough of a change that I might have to think about doing some management over here. I have to say, you know, I always see people bashing on the Goldman Sachs analysts on the forums and stuff. They say, oh, well, if the analysts at Goldman Sachs are saying this, then it must mean that they're taking the opposite position. You just got to remember, they don't prop trade anymore, right? So if they're taking positions on one thing, it's because that the hedge funds are taking it and they're servicing the hedge funds, right? And but there are some of their analysis on there that I think is really good. But here's the thing that I would look for. This is what you want to look for. Things that can predict future orders. So every once in a while on Zero Hedge, you'll see a post about what the Goldman Sachs flow analysts are saying. And they'll say something like, we expect X billion dollars to come into the equity markets over the next month. Okay, so the way that they do this is they look at their own flows and they have all of these quantitative models to model where that flow or why that flow is coming in, and then to try and predict it. That sort of information is extremely useful, and that is the primary reason why I'm still largely bullish about equity markets in December. So because they have reason to believe that a lot of money is still to come in December. Depression is a great problem today, has been created by encouraging people to always seek more. I think that, yeah, the way that dopamine is manipulated by modern social media and stuff does tend to lead people into depression. Anyways, that's the best news that you can get. Is you got to ask you, it's not just news, right? Because everybody thinks news, fundamentals. There's this one world that's news and fundamentals, and there's this one world that's technical analysis. And very often this world that is fundamentals fails really, really hard. And we kind of ignore it when it happens to the technical analysis guys, right? But the reason that it fails on the fundamental guys is because not all fundamental information leads to new orders, right? And so you have to be able to understand things well enough to understand what is going to lead to new orders or predict new orders coming into the market and what's not. And this is why I say, once you understand the fact that orders are what's moving markets and that's what you really need to predict, it's like you can see the matrix. All of these things that were confusing and didn't make sense before are suddenly really, really clear. Okay, I did not like that. How is that useful for scalping? Because you can use that to, again, you're going to be predicting orders. So if you know that because of gamma or whatever the deal is, we're going to be moving up, then why are you going to go short? Right? Or like in this current situation, I didn't see anything really clear in the economic releases that would say, hey, we need to move up. And we have a big risk event that I think the risk is really to the downside in treasuries with the FOMC meeting minutes later today. So that's why I'm not sitting here like gung-ho about holding this all day and just letting it run, right? Because I know that the reason that it's moving probably has more to do with short-term liquidity concerns than it does anything else. Here, Cages says, I blame TikTok. TikTok, I don't think that we've even begun to scratch the surface of what kind of problems TikTok brings. So the thing with TikTok is that the content that you are provided is determined entirely by an algorithm. And I really think that we're letting algorithms run amok. Like everybody thinks, oh, okay, you get this machine learning algorithm and it's always right. And that's not the case. Like, you know, if you do any kind of quant trading at all, the first thing you learn is that we have a tendency to overfit, right? Gosh dang. You can trade order flow and look at the news later, but you can't trade the news and look at the flow later. What are you talking about? Here's what you do. You hear the news in your ear, and then you watch how the order flow behaves. As soon as you hear that news, you should have an idea about what you think the order flow is going to do. And then if you see the order flow doing that, then you take a trade. Why do I have this here? I've gotta sort some things out here, guys, because I had a really good trade at the beginning of the day that I didn't take enough profits on, and I had a really good trade on there where I took on a lot of risk, but it really, really worked out for me, and I did not take enough there. I lost about half of my profits there. And maybe they turn back up and keep going up now, but I'm to the point where I'm just so frustrated with it that this is a real problem that I haven't had in the past, and I'm not sure where I'm going wrong or I'm doing things differently here. But in the past, when we had a really slippery market, I tended to have a pretty good feel about where I needed to take profits, and right now it's just not working. Probably me getting out there at that spot was probably really a poor decision. I mean, the ZB could shoot back up there, right? But again, the issue is I don't necessarily want to be short rates going into the meeting minutes, because the meeting minutes I think are likely to be bearish. Or at least there's enough of a bearish risk, because I don't think you want to have that position on unless you already have a ton of profit baked into it. But the thing there was that I could see the resistance in the 10-year, and I said it could pull it down, but I didn't immediately act because I started to get some profits again. I should have taken it there. I would have gotten 30 over here and 10 over here. Would have been really happy with the day. Well, not happy with the day, but it would have been okay. What if there are 10 opposing news? Okay. What if I make a contrived scenario just to try and, what is your point exactly? I mean, here's the thing. All I'm saying is this is what we know about how markets behave, okay? It's much easier for a statistical inefficiency to get arbitraged out of the market than it is for an informational inefficiency, because the liquidity concerns have such a high impact on asset prices, okay? So it's up to you to determine how you're going to take advantage of that, but based on what we know, it would make sense that the more information that you have, the more opportunities you might have to be able to identify an informational efficiency and take advantage of it, right? Well, we definitely did it there. We kind of knew that because of the way that played out, that people had been short. And so we knew that there was going to be liquidity concerns and we could take a trade off of it. But we also know that there's like an informational inefficiency, because based on what we know about the last FOMC and what we might see come out in the minutes, couldn't that justify higher rates? It definitely could. And there could definitely be people out there trying to price it in. It's just the current liquidity concerns are outweighing that right now. Maybe I need to move over to set targets a little bit more over in these. Like if I'm going to trade the 30-year, I could have taken, at 30, I definitely should have been taking some, but probably even at 20, I should have taken some off. I did see the 30 seems to be polarizing a little bit more, but the 10-year is still kind of wants to push back down. And I really, really see the possibility. In fact, I will take a risk on it again because I have some time. I do see the possibility of the ZB failing here. I don't know. If there are 10 opposing news, probably there's going to be a lot of a mix, and the person that's going to make money is the person that's going to be able to make the sense of that the most quickly. Okay, and so they put a strong bid in the 10-year. That was unusual. Where was that at? He's still there. 23.5. No, he's not. He pulled. He spread it out at 24. Oh my. Given the situation, I'm not so sure that we want to get involved because of that big order. I mean, it has been a pretty active day, right? But like the move was kind of stalling out, right? Like that kind of feels to me like somebody trying to force something to happen. I don't know if we actually want to take trade on that. It's a little bit too late, and it's before a holiday and everything for, the timing of that is just a little suspicious. Okay, so here's why that's a terrible idea, fake. How about I let insider traders who are the best at information inefficiencies do their job and only catch their order? They try to different companies, they go to jail and stay home. No, because how do you know that that's them? How do you know when you see a move over here? So for instance, we saw a pretty big order come in at 2000. It moved up, and now price is coming back down. Okay. Well, let's just assume that price hadn't come back down. We were just looking at the big order at 24. Okay. How do we know why that guy placed that order? Is it because he's an insider and he knows something? Like he knows what the FOMC meeting minutes are going to be and he's bullish on treasuries because of that? And that's why he's placing that order there and chasing it? It's possible. Or he could be putting it there because of short-term liquidity concerns. He actually wanted to get out. And so he placed that there to try and create a little bit of buying in the other instruments so that he could get out of his positions. Or maybe he really does need to buy, but it has nothing to do with the FOMC. Maybe it's just like he's stuck in a short and he really wants out because he wants to break even or something like that. How do you know? Just based off of only knowing that. And here's the thing, is that I just listed out to you like 3 or 4 different scenarios for why that order may have possibly have shown up. The only reason that I was able to list out all of those different scenarios for you is because I know what is going on in the market. If you take the position that I'm just going to watch the flow, then you're not going to be able to work that out. And here's the thing. When you get a big order like that, is that like a really good probability that we're going to continue to move up or that we're going to flip and move back down? Not from the research that I've done. Markets will have certain tendencies and then it will change. There's regimes with them, right? So you can't do that. But you see, if you know what's going on, you might have to curate a bunch of different theories about something. But sometimes you really just know pretty clearly why a certain thing is happening, right? For instance, we know that the really big strong move that we had down towards the beginning of the session was because of bearish comments from Fed's Daily. Or not bearish, but hawkish comments from Fed's Daily. That was what caused that particular move. Then we had the news. A lot of that news was in line, and I didn't really see anything to sort out from it. But we started to move up, particularly in the 30-year because of spreads. So there's a flattening going in there. So why did we move up? Because of liquidity concerns after the news, people closing positions and so on and so forth, right? So because we know all of that, now we kind of know the current situation. We can make a lot better decisions, right? And we might be able to come in and say, well, we've moved up because of short-term liquidity concerns, but we also know that the FOMC meeting minutes have a high hawkish risk in them, so we can try and use this opportunity to build a position short. You see? You can do that because the market's not informationally efficient. And the issue is that, by the time, when you're talking about just watching the flow, like by the time you see it, it's like it's already there. Like you're too late, right? And you only care about the impact his order has on the next 50 ticks. Well, listen, if that's what you're trying to trade on, there are some situations that you can make money from doing that, but the kinds of situations where you as a retail trader are going to catch those trades are few and far between. That's probably not going to be enough to keep you going day to day. So you got to realize a statistical inefficiency can exist. A retail trader can take advantage of them, but the amount of edge that are available in them are not nearly as large as retail traders believe. Your demo trading says that you're better than me. I don't feel like I've traded very well this week. I was doing super great, and this week has kind of been like I had a lot of really great opportunities, and I probably could have made like $100 this week, and I didn't really make anything. Just from my own fumbling and so forth, I kind of let some of these slip through my fingers. Time to get going here. Yeah, I don't think I'm going to take more trades. I had a good trade on there. I made a little bit from it. If I continue going here today, then I'm really over trading, right? So, because I already spent like, oh geez, how much did I spend? $6 in commissions. So, almost $10 in commissions, something like that. So I over traded a little bit today. I had some good trades, but I think I should switch. Instead of trying to take them in both sides here and stuff like that, I should be trying to take multiple contracts over here and take a little bit of profit. Or take profits on the side that's not doing as well and reposition it. Might be another thing that I could do. But you know what? It's a weird week, right? And not too much damage was done. Actually, I need to come back here and look. Where does that put me? I think that probably does put me slightly down on the week. If I had made all of that, if I had taken my profits here where I should have, then I would have been fine. But yeah, that does put me down on the week. Oh, wait, how did that? Oh, because there was this other one. Okay, hold on. I'm like, oh, what happened? There was another trade that didn't work out, right? Okay, yeah, that just puts me down on the week 20. It's fine. Especially since we are getting some trades that are more than 20, right? We've just got to be better at, well, I think I'm getting better at taking advantage of the opportunities and pressing them. I'm just not getting out of them quickly enough because we've been in this volatile market where it's going. But I really think, especially after Thanksgiving, we'll be watching at the beginning of the week, but it looks to me like the way that this played out in the treasuries is the kind of event where it could help volatility because both sides got something today. Of course, we get another piece of hawkish news, and the bottom could just completely fall out. But I think liquidity wise, we're probably a little bit more balanced. Okay, guys. Well, anything else I should do? We did end up getting a decent number of viewers today in the end. Pretty interesting session. Man, I want to come up with better titles. I want more like Dragon Ball Z like titles. Think about that one. And then what should I do? Because I actually have the day off, so I have the opportunity. I could record some stuff. Although I think I might do the recording tomorrow or Friday. I think I wanted to try and do a little bit of writing today, but we'll see where we're at. Okay, guys. Hey, I will see you guys on next Monday. Make sure you check Discord if there's any Black Friday sales that come out on the day of. I will put them in the lobby on Discord. I'll be available on Discord. You don't have to add me as a friend or anything. You can just message me. Hopefully we'll have a video on next Monday. So see you then. Stay profitable.